you really want me on the team? What's your approach to recruitment?
You want first place, come play with me. You want second place, go somewhere else. Like I would watch Magic play, I'd watch Michael play, and I would see them do these unbelievable things, and I'd say, can I get to that level? I don't know, but let's find out.
That's why he's the best player in the game.
9, 8, 7, 6, 5, 4, 3, 2, 1.
All right. What's up, everyone? Michael Mansell here, coming to you live from my studio in Tucson, Arizona. And I got my good friend, longtime business partner of mine, Cedrick Harris, on here. Cedrick, welcome to Conversations of the Successful tonight.
What's up, Michael? How you doing, brother? I'm so excited to be rocking and rolling here with you on this new app. Really excited to have this conversation with you, brother. So let's dance. Let's do our thing.
So we're going to get into a specific topic here tonight that I really want to grill you on because you've been in this real estate game for a while, and people already know because of the title of this that we're going to be talking about how to legally pay off your mortgage in 5 to 7 years and what that looks like. And we're not going to get into all the specifics of the program, but I really want to get your insight into why you think this is a viable option for people, and especially right now in kind of the day and age that we're living in. We're going to get into that topic, but I also want to encourage my viewers to ask questions during here too. I can't promise we'll get to all the questions, but don't be afraid to ask the question, whether it's on Facebook or on Haps or any other place that we're streaming. I am monitoring the chats over here on Facebook, and they do pop up over here as well in my chat. So don't be shy about asking questions. I mean, you've got a very, very successful person here that I'm interviewing and having a conversation with. So who wants to be a little fly on the wall to hear Cedrick and I's conversation tonight? Let me know in the comments if you guys want to be a little fly on the wall here. And Cedrick and I are going to have a very unscripted, candid conversation like we would do, kind of like when I was out in Florida last year in the fall, and we were just kind of hanging out. We had some pretty interesting conversations, didn't we?
Absolutely. And that's what it's all about. I mean, people don't understand how powerful a network is. And I think a lot of people don't understand how powerful relationships are and what they can lead to. So I'm just happy to be rocking and rolling here with you and been having a relationship with you for, I don't know, about 12, 13 years now. So it's been wonderful.
Yeah, it has been a little while. So give a little backstory on that. What was your impression of me for one? And just be honest, back when I was saying a bunch of yeses and not going anywhere with them, like give people a little insight into what you saw and then what's possible after that.
Man, this is really an unscripted thing right here, huh? Okay.
Yes.
So I don't know, it was what, 12, 13 years ago when you first came into the industry. I mean, we were working with the company that rhymes with Cialis.
Yep.
You really weren't that big on the internet at the time. I could tell that you were very intelligent, with the background that you came from when it came down to the, what do I want to say? The connectivity side of the world, from buttons, from the engineer mind, from understanding video, from understanding certain things that a lot of people didn't know. But yet you didn't have that YouTube presence yet. You didn't have that internet presence yet, but you did have that attitude that I'm going to win. You did have that eye of the tiger, and I could smell it. I could feel it. I remember hanging out with you at your home, in Arizona. I remember, I don't remember your dog's name offhand, but I remember sharing a bed, with your dog as well, and hanging out with your beautiful wife, and really understanding the type of people that you both were. And I think, at that time, you were like literally in that particular company, you qualified for a BMW. It was your first introduction to the game of net. Well, it wasn't your first introduction to the game. I think it was your first introduction to really starting to do some things online and offline. And
yeah,
I don't know, you were $1,000 a month, $1,500 a month person back then. We fast forward 12, 13 years later, multiple 7-figure earner in affiliate marketing, multiple 7-figure earner in network marketing, someone who actually has companies that pay you to do reviews on their products all over YouTube, someone that can go live and stream all over the place, someone that's smart enough to jump on an app like this and take advantage of it very, very fast. And one of the things I can say about you, Michael, is that, we do have a lot of conversations about different things, but you never let grass grow under your feet. Even over the past 45 days, we've had some interesting things happen in our life from the cryptocurrency world. And I'm like, hey, you might want to look at this, done. You might want to look at this, done. You might want to look at this, done. Hey, I'm getting out of this one, out. I'm getting out of this one, out.
Yep.
And we've won 100% of those. Now that I go back and I think about it, yeah, we've won 100% of those. So it literally came down to, hey, I'm not someone who lets grass grow under my feet, and you've been an innovator all this time. And the other thing I'll say about you as well is that I've seen a lot of organizations. I've worked with a lot of leaders inside of the direct selling arena and affiliate marketing arena. And I can say that you create one of the stickiest organizations that I've ever seen. You understand culture. You understand how to give your team value, and your team keeps their eyes on the prize because you're leading by example and not moving them here and moving them there. And if there's something that has to happen that's out of your control, then yes, you're going to let them know, but you're also honest about it as well. You're not going to pull any wool over their eyes and try to just tell them something just to tell them. So I can appreciate that about you, brother. And it's hard to find, good people with integrity in our industry today. So that will be the backdrop that I will give everybody in the audience right now.
Well, I appreciate that. I certainly wasn't fishing for all the nice things you said, but I really appreciate that, because when looking back, it is nice to take a pause and think, you know what, those are some things that I did right, and those are things that I'm doing right now. Obviously, there's still things that we do wrong, but we're learning as we go. And if if anybody just listening to Cedrick reminisce there a little bit, let me know in the comments if you guys picked up on any clues there of what you guys should be doing to have similar levels of success in your life and in your business. Because what he was talking about there, not letting grass grow under my feet, I actually, Cedrick, I did let grass grow under my feet. You and I were actually even though we didn't know each other, you and I were in the exact same network marketing company back in 2000, at the same time. And you didn't let grass grow underneath your feet. I did for about 10 years. I was exposed to the same stuff you were at the same time, and yet you got to moving, didn't you?
Yep, I got to moving. However, I will say this. I got to moving, and I paid attention to successful people that were around me. On the same token, the bigger advantage that I give to you is that, yeah, you might have got to moving a little bit later, but you also allowed the brain of someone who understands technology that may have been a little bit behind on that point, but you sped it up with the technology and caught up very, very fast. So that was a great, way to kind of speed past a significant amount of people, that's for sure.
Yeah, I definitely love to leverage technology, because it is a big game changer for a lot of people. A lot of people are intimidated by it. So the one thing that I've learned to do over the years is set stuff up that people can then just kind of hop on the train with me and leverage the technology that I've put in place. And one of the things that I've enjoyed probably the most over the years here is leveraging technology, but helping other people leverage those same technologies. And Cedrick, you've like stepped up your game on a lot of different ways as well. Because back in the day, you'd be just happy as a clam, just getting up on top of stage and never even touching your phone, right?
Absolutely. I actually live for that. I love training. I love inspiring and motivating. And really, I tell people, you give me a microphone and an audience and a clock and tell me how much I've got, how much time I have, and I'm off to the races. But on the same token, you can't ignore changes that are happening around you. If you ignore changes that are happening with, something like a YouTube or something like a Facebook or something like a Twitter or something like a Clubhouse or something like a Haps app here or, Periscope back in the day that we were using, if you ignore those pieces of technology, it could cost you a lot of money. I know a lot of people that are literally too locked into worrying about what people say about them or what people think about them or their hair or their eyebrows or their skin color or, their house background or whatever, that they don't get on video. They don't engage with tools like this, and they have so much value to give, Michael, so much value to give, but they think that they can give 100% of that value just with the telephone
Right.
or just through a text message. And I feel as if they're cheating themselves when they do that.
Yeah. Yeah, and there's just so many people out there in the world that connect in different ways. We need people in all different, arenas, but I've been able to build massive businesses and massive organizations online by telling people, "No, I don't get on the phone. Happy to have a conversation with you right here in messaging." And, I have had a few people say, "Well, I'm really old school. If you don't get on the phone with me, then we're not going to work out in business." And I'm like, "Okay, then I guess we're not going to work out in business." And it's not because I'm being rude. It's just I'm trying to be efficient because I can help, 10 new people and 10 of my existing team members all at the same span of getting on the phone with one person. Now, does that mean that I never get on the phone? No, it just means I'm very selective about when I invest my time to get on the phone and talk to somebody. So, but that's not for everybody.
No, absolutely. And I think that you used the key word, efficient. It's all about efficiency, right?
Right.
Like I love the telephone. I love connecting with people. I love messenger. I love texting. I love video. I love all those things. But I think a lot of people fail to realize a lot of times that time is money.
Yeah.
And one thing that I don't like to do is waste it. And people call me, so hey, say it, how's the weather in Florida? And I'm like, it's Florida.
It's Florida. It's humid.
You know what I mean? Like, that's while I'm here. When I got here, I was light skinned. Now I look like Wesley Snipes. It's Florida. That's why I'm here. So, like, what is the purpose here? Like, let's talk about what we're doing. And I think that some people just want to, there's nothing wrong with having general conversation with people.
Right.
Having those fun conversations, but I think that people have to be selective of there's times for that. And when it's work time, and especially right now that I'm in the middle of a massive launch right now. It's
Yeah.
like the time of kumbaya. I can do the kumbaya at 1 o'clock in the morning, from like 1 to 2 when everybody else is asleep. But all day long, I'm just working, and I'm back at it at 6 o'clock in the morning. So, but that's because I'm in the middle of something massive at the moment. And I
Right.
understand that we've got to compress that time for sure.
Yeah, and let's share with people too that might be a little bit turned off by the idea that we just want to get down to business and we're here to do business and we're here to help you do business. By the idea that if somebody has all the time in the world to sit there and chit chat and talk about the weather and talk about this, that, and the other thing before they ever start talking about business, then they're probably actually not that busy and not that I'd venture to use the word successful yet, possibly, because there's some people just getting started. I don't want to knock anybody just getting started, but if they're coming across as, successful and busy, they probably won't have much time to initially invest in you if they're doing some big things that you will want to be a part of.
Absolutely. And I think that people have to always remember that you work where you are deserved, not where you are needed. A lot of people tend to work where they are needed because they like to hear their name. They like to get that pat on the back. They like to know that they're great. But then they forget to work with the people that actually deserve their time,
Right.
the people that are running, the people that you don't have to drag across the finish line. So that's why anytime you text me or inbox me or call me, I know I'm never dragging Michael across the finish line. Hey, Michael, what's up? What's going on? Like we've got time for each other. But then there's other people that, just want to text and kick it or whatever the case may be. And again, there's nothing wrong with that. There's nothing wrong with that. But it's just like you said, if somebody has all the time in the day to do that, they're really not that busy. And they're probably not making the money that they said they are. And they're hiding behind a Facebook profile or an Instagram profile with some fake stuff in the background at the same time.
Yep. Yep. Absolutely. Speaking of, let's get down to some business because time is money. Money loves speed. That's what I like to say. So, money loves speed. And let's move right in here to one of the main things I really want to ask you about because you alluded to it here just a little bit ago that you're on a massive launch. You're making some big claims too. You make some big claims in the past. And I'm like, yeah, Sid. Yeah. Yeah. Okay. Yeah. I'm sure it'll happen, but not tomorrow. But you're talking about, televisions like series and movies being made about what you guys are doing right now. And I'll just be completely transparent here. I'm in it with you and we're working it together, but I still got to maintain a little bit of an interview style here. So let's start talking about that because it's in the realm of mortgages, right? It's about the amount of money that people are paying to the banks. And I wanted to get the domain name "Say No to Banks," but it was like $25,000 or something. Um, but
Wow.
let's dive into that because you've been rocking and rolling and helping people get set up with this. A way to pay off your mortgage in 5 to 7 years without making any more money. Is that correct? No more income that has to come in to actually achieve that?
Absolutely. Absolutely. It's a beautiful thing.
Yeah. So let's just pretend for a second that I want to pay off my mortgage. I don't want to spend another, 270. I ran my calculator. Everybody that's on here, I'll give you guys a link here in a little bit where you guys can run your own calculator. But I ran my calculator. If I paid off my mortgage in it said I could, based on my current income, and I probably should throttle some of those numbers just so I have a little pocket change to go do some fun stuff too. But um, it said I could pay off my mortgage in 37 months and save 282,000 in interest. I'm pretty down with that.
Yeah. Yeah. So let's definitely do this interview format, Michael. And I wanna go back a little bit so I can give people a little bit of background,
Yeah.
so they don't think that this is something that just popped up out of the air. Um,
Yes.
First of all, I got into the mortgage industry in June of 2001. I knew nothing about the mortgage industry. And I was working with a company called Mortgage Investors Corporation that only did VA loans, people who actually served in the service. And all we did were VA streamlined refinances. We were not the people that did originations. We didn't do option arms. We didn't do cash outs. All we did were strict VA streamlined refinances. Somebody that was at a 7%, we dropped them down to 4%. They were at 8%, we dropped them down to 4%. They were at 6%, we dropped them down to 4%. Those particular veterans, the loans were already guaranteed by the government. So anybody that's on here right now that has a VA loan, they already know that. So it was already guaranteed by the government. And because it was a streamlined refi, we didn't have to have any income verification. We didn't have to have an appraisal. We didn't have to have a flood certification. The only thing that that veteran had to provide was to prove that they were current on their mortgage. As long as they were current on their mortgage, they were approved. And the loan closed in 7 to 10 days. Now, anybody that has a mortgage background knows that it's extremely hard to close a loan in 7 to 10 days. Now, you can close a home in 7 to 10 days if it's a cash deal and you've got a great title company that did a title search really, really quickly and got that done fast enough for you. But to do a loan in 7 to 10 days is pretty unheard of. So this was straight streamlined refinances. I knew nothing about it. June of 2001. And basically, the way our company worked, Michael, we were not traditional loan officers. We actually didn't even hire loan officers. The company generated leads through a telemarketing department that the owner owned. They were all VA people, so people who've actually served in the service. I live in Florida right now, but I'm originally from Virginia. And Virginia is the second largest state populated for veterans, second to California. So our office had a gazillion leads. We had the biggest office out of 28 offices that were in the country. So we would get leads provided to us the night before. It would tell us where we were going to go. Every week, they took care of our gas. We drove to those leads. We sat down with that veteran. They either responded to a telemarketing call or a direct mail piece. We sat in their house. We did a presentation with them called The Monster in Your Mortgage. That's what it was called, The Monster in Your Mortgage. Now, the monster in your mortgage, for those of you that don't know, it's called interest. So we would sit there and go through a quick flip chart presentation with cartoons. And one of the pages that would really catch people's eye that most people don't get, I would get to this one page and I would sit with people and I would say, Michael, how much did your house cost? It cost me $100,000. Great. Michael, how much is your house cost? It cost me $100,000. Let me ask you that question. Michael, how much did your house cost? It cost me $100,000. Okay, let me help you out here. I would get to this one page and it would say, year one, you made $10,000 in payments and you paid your mortgage down by about $1,000 year 1. Year 10, you've made over $100,000 in payments, but you paid your mortgage down by about $12,000. In year 30, you paid $300,000 in payments for a $100,000 house.
Shh,
And then
don't tell people that. They don't know. That freaks them out.
Oh, it freaks them out. But this page was so sexy, Michael. It was a page that said, so this is the house that you bought. And it showed a small house. And then it said, this is the house that you paid for.
Yeah.
It showed a
Little
bigger
check.
house. And that was sticker shock for a lot of people.
It
because
was.
truth will set you free. And most people don't understand this because when somebody buys their first home, they're excited. It's the American dream. You get to the closing table, you're there for 30 minutes, 45 minutes, signing document after document after document after document after document. And your goal was one thing. Your goal was to walk out of there with these. Your goal
The
was
American dream.
the American dream. But little did most people know, Michael, and I'm sure that some people can attest to this, and it's proof in your file cabinet when you go grab your closing docs. The documents that the title company pushed to you first were the easy documents.
Mm-hmm.
Your trust, your interest rate, the survey, the appraisal, all these little things that you initial to sign. And then the last document, or the second to the third last of the document that they gave you, was a document called the Truth and Lending Statement. They never started off with the document because it would freak you. It's called the Truth and Lending Statement. Now, everybody that's here that has a mortgage on their home right now, you currently, my friend, have a Truth and Lending Statement. Now, the government made all banks provide every consumer a Truth and Lending Statement, so everybody has this. And that Truth and Lending Statement is exactly what it is. I want you to think about those 3 words. The truth and lending. And what it shows is how much you bought your house for, the APR, not the interest rate, the actual APR, because the APR calculates your closing costs and everything. So if you had a 3.5% interest rate, it would show 3.9 or 4.1, okay? And then it would show how much you would pay after 360 payments. And remember, this was the last document that you had, the second to the last document. Like,
when you're tired, you just want to go home.
You want
just get your keys.
So you sign it, and little did you realize that you just signed something that said, I bought this house for $100,000, but I'm actually going to be paying out $300,000. But I thought I got a 3% interest rate. You forgot about the monster in your mortgage and how interest is calculated with the mortgage. You totally forgot. So I'm gonna pause right there, Michael, because I went really deeply, and you might have a question or two, or there might be feedback on the other side that we want to address before we get into the next step of this.
Yeah, but I appreciate you providing that backstory too, because a lot of people don't hear that truth right up front to understand why we become so passionate about this topic. Yes, we've got a great service that can help people do something amazing. Yes, we're going to provide you with information on how to secure that tonight, but we really want you to understand what your mortgage situation currently looks like, completely, unfiltered. And Cedrick is one of the best at understanding that because you've made a lot of money in the real estate industry. You've been there, you've done that. I've had my real estate license in the past as well. And coming from your position and what you understand, what you've seen from the other side, and securing those houses and the mortgages and the money that's made on the bank side, showing those amortization schedules at the very last when people are tired, they're worn out, they just want to get their keys. That's what people actually experience. And so hearing you share that is really, really valuable, I think, to people. And I want you guys to comment in the comments if you guys knew any of this. If you've heard anything right now that you were just like, okay, wait a second, I have not been told this by my lender. And I'm not knocking the lenders. The lenders are there to do their job, to make the money and they're going to make as much money off of your house as they possibly can. But is any of this information new? Or if you've heard it before, you understand it, or you think this is accurate, comment that in the comments as well. We already got a spot on award right there, I see. So thank you very much for that. But whether it's on Facebook or here on Haps, let us know if what we're talking about is something that is in the vein of truth, because that's what we speak here. And if it's something that you've never heard before, it's not your fault, right, Cedrick? It's not their fault that they've never heard some of this stuff before. They don't teach it in school.
Absolutely. I mean, self-education is way more valuable than school education or book education. And well, let me take out the book education because there's so much information that you can learn from books. Yes. But you want to do it from a self-education perspective. These aren't things that are taught. And I give you a easy analogy for people that are looking at this here real quick before we go down the rabbit hole a little bit deeper. I am 46 years young. I have 2 young daughters and a grandbaby that I love, right? And I want you all to think about this for those of you that have kids in school. In school, they teach sex education. That's one of the topics that they teach. It's very easy for them to talk about diseases that our kids can catch if they do not have safe sex. I think that that's important, okay? That's important. On the same token, I think that what's a little bit more important is that if it was a FICO class in high school, there was never a class that any teacher in high school or college for that matter taught on the importance of Experian, Equifax, and TransUnion. Now, I would say that that's extremely important because our credit scores follow us all of our life. Now, if you catch the wrong disease having sex, that will follow you all of your life as well. However, they've got pills for majority of them, okay? There is no pill for Equifax, TransUnion, and Experian. There is no pill that you're gonna take if you screw your credit up down to a 500 credit score and you need to get it back to a 750 in 48 hours. There is no pill that you're gonna take that's gonna do that. That's something that's extremely important, but yet we let our kids go to college, and now the influence of our parents are not around us now. We've got the influence of all of our peers, and what do they have in college, all on college campuses? Hey, you need to get a Discover card. Hey, get this American Express card. Hey, get this MasterCard. Hey, get this Visa. And there's never, and you can correct me if I'm wrong, anybody here, there's never anybody at that booth that is telling our kids to get a credit card that says, once you get this credit card, you should keep the balance at 30% or under.
Yeah.
They never say that. And they just burn it up, burn it up, burn it up, burn it up. And 4 years later, they're in $20,000 of credit card debt plus student loan debt. Like, that's something that follows us for the rest of our life. And that's so, so important. And it comes down to, again, self-education. That's the only reason why I'm using that analogy, self-education.
Yeah. Yeah. And that self-education starts right now. It's not a matter of us, you and I talking and somebody hearing us talk about this and saying, oh, shoot, yeah, I did that. I can guarantee you almost probably all of us on here that are watching right now. In fact, comment, I did that. If you guys straight out of high school started accruing some credit card debt, maybe accrued some student loans, maybe some other bad debt, went out and got a car that maybe had a higher car payment than you really should have gotten because, well, wasn't the car dealer supposed to tell me what I could afford? Why didn't they tell me that was more money that I could spend? If I really shouldn't qualify for that, how did I qualify for an 18% interest rate on my car?
Exactly.
We've all been there. I've done it.
Absolutely.
So, comment that on the comments. Let us know if you've ever been there, done that with these things that we're talking about. So let's move a little bit further into this because I want to provide people with some solutions because we're talking little horror stories right now of just what the reality is of the situation. And it is something, a mortgage is something that provides us a means to acquire something that is a real asset. So our home is a real asset, correct? It is something that is valuable as long as we've got a little bit of equity in it. And that we're not completely buried and upside down. But it is an asset. So you're not telling everybody here that we shouldn't go out and get a mortgage, right? We shouldn't have a mortgage at all, or that
No.
we have a mortgage, we've done the wrong thing, right?
No, no, I'm not saying that at all. It's definitely the way that 9 out of 10 people actually acquire a home. What we're literally talking about is how to allow your money to work a little bit differently. That's all. It's allowing your money to work just a little bit differently with the concept that's been happening for well over 2+ decades that is provided by most of the same banks that you actually have your mortgage through. But the loan officer isn't going to tell you this because they need to make the points off of the loan, okay, for number one. Secondly, what most people don't realize, Michael, and I have to go down two quick rabbit holes. There's two
Before.
rabbit holes that I have to go down so people understand. I don't care which city that you're in right now that you're looking at this. The biggest buildings in your city are owned by the banks, period. Period in the story. The biggest buildings in the city are owned by the banks. That's number one. Okay. Secondly, what you really truly have to understand is the how to have interest work for you versus interest working against you. So here's what the average bank understands. And I want you to comment in the comment section, if you just say that's me or that has happened. Okay. Check this out. The average bank understands that the average person who buys a home is either going to move in 5 to 7 years or they're going to refinance in 5 to 7 years. This is what the average bank understands. Even the above average bank. They know that you're either going to move in 5 to 7 years or you're going to refinance in 5 to 7 years. Now, for those of you that do not believe this, let me help you out here really quickly. We have just entered over the past year and a half, close to 2 years since COVID hit, one of the lowest interest rate markets we've ever seen. When I was in the mortgage industry back from 01 to 06, you bought a house at 9 o'clock and you sold it at 9:15. That was before the 2008 crash. That was back when you can get a home just because you were breathing. If you had a business card, they gave you a house. You can show a pay stub, they gave you a house. They gave you a pay option arm. They did this, they did that. They did all these things that crashed the market. That's why I felt good in what we were doing because all we did were VA streamline refinances, right? So if we go back to when COVID started, okay, the feds dropped the interest rates down to 0, which drove mortgage rates down to 3%. There was a couple of months, there was a little window where you could actually get a 2 3/4 mortgage for a 2 3/4 30-year mortgage. And then if you had good credit and you had the right mortgage broker, you could actually buy your rate down. But on average, it was about 3%. 3%, 3.25%, 3.5%. So when you have 3.25% money and 3.5% money, people qualify for a much bigger house than they do at 5% or 6%. So people that were at 5% interest or even 4.5% interest or 6% interest 5, 6, 7 years ago, they saw these 3%, 3.5% interest rates. And what did you do? You went and refinanced. Okay, it can drop my payments down by $200 a month. Okay, how many of you did that? It can drop my payments down by $300 a month. I'm going to save a point on my loan. I'm going to save 2 points on my loan. I'm going to save 3 points in interest. I'm going to do that. But here's what most people didn't realize, Michael. They had a 30-year mortgage 5 years ago. They've been paying on it for 5 years.
Yep.
It's refinanced down to a 3.5% mortgage or a 3.25% mortgage from 5%. They just took
reset
5 years and flushed them down the toilet and started right back over at 30 years to save $200 a month.
at the beginning of the amortization schedule at the very beginning.
Exactly. And what most people don't realize, like we're going to open up some eyeballs today. What most people don't realize is that the first 10 to 12 plus years of your mortgage is 90+% interest. It is front loaded. But no, Cedrick, I got a 3% loan in my Kevin Hart voice. But no. Look at your payments. Go look at your principal balance on your Wells Fargo statement, on your BB&T statement, on whatever bank that you have your mortgage with. And if you've been paying on it for 3 years, 4 years, 5 years, I want you to remember how much you paid for the house, how much your mortgage payments are, and what your balance is. because the first 10 to 12 years, it is all front-loaded interest. You're really not starting to put a dent on your mortgage until right around year 12, year 13. You start to put a little bit more dent on it. Then by year 15, you're starting to really start to play the game. But the banks already know that there's a good chance that you're going to refinance within the first 5 to 7 years. So they've got all that free money and interest, that they got. And now you come back and start the hamster wheel all over again. Now, you didn't know this because you weren't educated on it. So it's not like you did something wrong. You didn't do anything wrong. You saw a 3% mortgage, a 3.5% mortgage. You saw $200 a month back in your pocket, $300 a month back in your pocket. And that's a significant amount of money to keep in your pocket. But what we're talking about is just a smarter way to do this, just a smarter way.
Yeah. Yeah, it really is. And it's nice to be able to educate people on those little facts because it is eye-opening. And look, a lot of us actually knew it and we went into it anyway. And then we get those letters in the mail. I mean, we get them all the time. They're, of course, they always leave out the insurance and the taxes and everything. Your mortgage payment right now is $2,400. Refinance with us and it'll be $1,200. Like, oh, it's not.
Exactly.
They're going to make you buy down the rate and all this other stuff. It's like buying a car from a dealer and walking out with all their extra plans. And now all of a sudden your payment went from $500 a month to $1,000 a month because you got all your little security things taken care of that they sold you needed before walking out there. Look, it's not the bank's fault necessarily. I think there are some lenders out there that they're pretty shady and they're cutthroat and they're going to go after as much as they can. But it is our responsibility and it is our fault if we don't take information like you're hearing right now and take action on it, right? Once you gain that knowledge, once you gain that information, just like back in the day when I was learning from Cedrick on marketing and, listening to his CDs back in the day, if the time from the time that I learned what I should be doing to the time that I took action on it, that was my responsibility. I couldn't blame anybody and say, well, I didn't know that. I knew it. So what am I doing on it? So now it's our responsibility to take action on it.
Absolutely. Couldn't agree more. And stop dating me with CDs.
I didn't talk about your cassettes or your 8-tracks. Come on, give me a break.
Stop it. I don't have an 8-track. Stop it.
Come on, you had an 8-track deck in your truck at one point. I'm sure of it.
I'm not that old.
No, I know you're not. Neither am I. So let's move a little bit into how can people, okay, we know the information. What can we do about it? Like what can we actually do about it other than, a lot of people say, well, okay, I'm going to double my payment or whatever and pay it down faster, stretch my means, maybe get a second job to pay it down faster, maybe switch it to a 15-year mortgage. Is there a better way?
Yeah. So one of the most popular, I'll go down the most popular ways, and then I'm going to go into what we actually teach here. So one of the more popular ways is that, okay, I'm going to take my mortgage down from a 30-year mortgage to a 20-year or to a 15-year mortgage. Like, so if you started at 30 years and, you're at year number, you've got 25 years to go or 26 years to go. If you consolidate that into 15 years, it's going to bump your payments up quite a bit. And some people can't afford that, but it looks sexy that they save so much interest and their house is paid off in 15 years. So that's typically way number one. Way number two, a lot of people, when they went to close on their loan, nobody taught them about a 20-year mortgage. So some people will say, okay, well, let me bring this down to a 20-year mortgage. Okay, that's way number two. Way number three that a lot of people teach is biweekly plans. And a lot of people don't understand this part. And this one is probably one of the easiest and one of the most popular ones. And with the biweekly plan, let's say that your mortgage payment is $2,000 a month. Okay. And on the 15th of the month, you pay $1,000. And on the 30th of the month, you pay $1,000. So it's the same payment, but it's broken in half. The middle of the month, you make half of the payment. The end of the month, you make the other half. Okay, and your bank actually provides this. All you got to do is call your local bank and say, hey, can you tell me about the biweekly plan that you have? Now, what that does is because of the amount of weeks that are in a year, you end up making an extra principal mortgage payment at the end of the year with no extra money. So it's the same money, it's the same $2,000 a month that you've been paying, but because you split it in half and the amount of weeks that are in a year, you've got an extra principal payment going toward your mortgage at the end of the year. And what tends to happen with that is that you shave off 3 years off the back end, 4 years off the back end, 5 years off the back end. So that could potentially save you, depending upon the size of your home, 30 grand, 40 grand, 50 grand in interest. That's a significant amount of money. And 9 out of 10 mortgage companies offer this, but if you don't ask about it, they're not going to tell you about it, because why would they want you to take $50,000 out of their pocket? Now, every now and then, you might get a little note on your mortgage statement to ask about a bi-weekly plan. Every now and then, you might get that, or you might get a letter from your current lender, or you get it from a different company that wants to charge you $500 or $1,000 to set up something that you could have did yourself. Okay, so those are the most popular ways.
Yep.
The way that we're talking about, Michael, is a way that has been happening for well over 20 plus years, that it's probably safe to say that whether you're looking at this from Twitter, YouTube, Facebook, or this specific app, that about 85 to 90% of the people that are looking at right now have never heard of. So you want to go down that road there, Michael, a little bit?
Yeah, let's dive people into it, because it's something that I think a lot of people need to explore as an option. In fact, we're going to give you some information where you guys can make your own decision. We're just talking about it. We're giving you our input on it, but we want you to do your own due diligence on it. And we're going to give you a link where you can go and experience this for yourself. But yeah, let's give them the good stuff in terms of what's possible in this program.
Awesome. Let's talk about it. All right. First things first, when a person thinks about a HELOC, which a HELOC stands for a home equity line of credit. 9 out of 10 people, when they think about a HELOC, they think about it as a second mortgage, quote unquote, okay? Or a second lien on their property. So you live somewhere and your house is $800,000, okay? And over the past 2 years or 3 years, because of what's going on in your neighborhood, now your house is worth $1 million. And you're like, you know what? I've got 200 grand in equity. I want to go get $100,000. So you go to the bank, and because your home appraises for $1 million, they'll say, look, we'll give you a home equity line of credit. Fantastic. We'll give you a HELOC, and we'll give you that HELOC for $100,000 or $150,000. That is typically 9 out of 10 times, typically a second place loan, because your first mortgage is for 800 grand, 700 grand. This particular home equity line of credit that is now a lien on your property is for $100,000, $150,000, whatever it was that you wanted from a cash out perspective. Okay, so they can't take first place of your mortgage, because your mortgage is way bigger than that. What most people don't get, though, is that you could actually have a first lien HELOC and not even have a mortgage. 100% not even have a mortgage, and it is a first lien HELOC. Now, why would you want to have a first lien HELOC? Why are so many people doing this even before you and I locked arms, and so many people locked arms within this program that we are promoting right now? We didn't invent this. What we're doing is spreading the word a lot faster, because we have affiliates that have influence, okay? But this has been happening for well over 20 plus years. So why would somebody do a first lien HELOC instead of doing an actual mortgage? Or what is the benefit of that? Okay. First of all, you need to understand that a mortgage is a closed-ended product. A HELOC is an open-ended product. So what do I mean by that? If you have $300,000 in equity in your home right now, and you wanted to pull out 50 grand or 100 grand or 200 grand, you have to go back to the bank and refinance, because that mortgage is a closed-ended product. You have to bring your tax returns again. They've got to make sure that you didn't claim bankruptcy or something since you actually bought the home. They're going to check all your income. They're going to check everything but your blood type to make sure that you still qualify. Then they're going to get the appraisal because you can tell them, hey, my house is worth $1 million and I only owe 700 grand. That's awesome. Okay. But we're going to get an appraisal. Okay. So you've got to refinance the whole property in order to do that. That's a closed-ended product, a mortgage. With the home equity line of credit, a first lien HELOC, majority of HELOCs have a 10-year opening on them. Here's what that means to each and every one of you in English, okay? Now, before I get into this, I want to let everybody know I'm not a financial expert. I do not play one on Instagram, on Facebook, on YouTube, on Twitter, on apps, PAPs, or DAPs, okay?
Pinterest. He does on Pinterest.
That you can readily find out yourself by doing your very own research, whether it's through Google, through YouTube, through whatever forum you want to do, or your financial advisor, if they choose to give you this particular information. So if the HELOC is an open-ended product and majority of them have a 10-year opening, what that means to you in English, here's what that means. But before I tell you that, let me tell you how this works. Let me leave you hanging there for a second. We're going to go to a commercial break. All right. So let's say that right now you have a $500,000 home. Okay. And let's say that you have a $350,000 balance. Now, this is just an example. Okay. Majority of these banks are looking for with the first lien HELOC is typically 20% equity and a good credit score. Now, if you have a bad credit score, and I'm not going to say like bad, but if it's under a 680 or something like that, it's 630, 640, 650. If you've got the equity, if you've got 40% equity or 50% equity, a lot of these financial institutions and banks will actually still do it because you've got the equity. So in this example, you've got a $500,000 house and you have a $350,000 balance. What you do is you get a first lien HELOC that refinances and absorbs your mortgage. So now you go from a $350,000 mortgage to a $350,000 HELOC. Okay, everybody with me so far? The HELOC absorbed the mortgage. It's not in second place. It is now in first place because you have the equity to support this. Okay, now let's take it down the rabbit hole a little bit deeper. Within a HELOC, the interest is calculated daily versus your mortgage interest is amortized over 30 years. So we're talking about daily interest calculation off of the balance versus as soon as you sign that document for your loan, if your balance started off at $350,000 for the loan and your payments are $2,500 a month, when you pay that mortgage down to $300,000, guess how much your payment is? $2,500. You pay the mortgage down to $250,000, guess how much the payment is? $2,500. You pay the mortgage down to $150,000, guess how much the payment is? $2,500. Because that interest rate is locked for that 30-year time frame. So with the HELOC program, here's what you do. You now allow your money to work a little bit better for you. And most people had no idea that this was even possible.
Yeah.
So let's say that you make $10,000 a month in this particular example. You make $10,000 a month, and let's say that your bills are $5,000 a month outside of your mortgage. You make 10 grand a month, but your bills are $5,000 a month for your entertainment, for your power bill, your water bill, your insurance, your phone bill, this, that, blah, blah, blah. What you can do with this HELOC, first lien HELOC, you can take the $10,000 that you're making and you put that on your HELOC at the beginning of the month. Okay? Everybody follow this scenario. You put that $10,000 on your HELOC at the beginning of the month. Keep in mind that this is an open-ended product. So if you need to grab that 10 grand or 5 grand or 2,000 or 8,000, you have 100% access to it because 9 out of 10 HELOCs have what they call a sweep account as well as a checking account and there's HELOCs that you can actually get a debit card attached to it. So you already have access to that same money. You make 10 grand a month, you put the $10,000 into the HELOC instead of putting the $10,000 into your Wells Fargo checking account. Now with the HELOC, you write your bills out of the HELOC. Your power bill, your phone bill, your insurance, all these different things. You write it out of the HELOC. As soon as you apply that $10,000 to the HELOC with this $350,000 balance that we're giving you as this specific example, now the balance is what? $340,000. The interest is now calculated off of $340,000, not $350,000. But Cedrick, I thought I had some bills that I was writing. You absolutely were. You wrote your bills out of there, and now maybe you wrote $5,000 worth of bills. So now your balance went to $355,000. You with me? Payment is calculated off of $355,000. Interest is calculated off of $355,000. Month number 2, you make $10,000 in a month. You put it on your HELOC. You do the same exact thing. You write your bills out of that HELOC. You put 10 grand on month number 2. Now the balance went from $345,000 down to $335,000. The rate, everything is calculated off of $335,000. You write your bills out of there. Your regular payments, your this, your that, your insurance, your restaurant stuff, blah, blah, blah. You used up $5,000. Now you're up to what? 340. You're at 345,000. Month number 3, you do the same exact thing. Here's what's happening, ladies and gentlemen. What's happening is that you are now making payments. The interest is being calculated off of the actual balance that you have on the HELOC. So every month that you do that, it went from 350 to 340, 345, 340, 335, 330, 325, 320, 315. That rate is basing it, everything is calculated off of the balance at that moment. Now, somebody's going to sit here and say, well, can I do that with my mortgage? No, you can't. See, if you put $10,000 on your mortgage right now, that 10 grand is going to go toward your principal balance. If you need to access that 10 grand, guess what? You can't call the bank and say, hey, I got an emergency. Can I get 5 grand of that 10 grand? Absolutely not. What you can do though, you can refinance and do a cash out.
Cost you $3 grand. Cost you $3 grand to get the 10 grand.
Cost you $3 grand. Oh, but don't worry about it. Don't worry about the closing costs. We will roll the closing costs.
Put it on the end.
Yeah, we'll make it out of pocket. Oh, you're so nice. Yeah.
Very nice.
No, nothing out of pocket. Don't worry about it. AK. Now the interest, all the closing costs are rolled into the loan. Now you're paying interest on the closing costs. Most people don't get this. But Cedrick, I close on one month. Whatever month I close, I skip the following month, and then I make my first payment. You sure do. You skip that following month, but you didn't skip the interest. So with this HELOC program, what ends up happening is that as you're applying this, and this is for people that have some discipline, as you are applying this, you're beating down that balance every single month, every single month, every single month, every single month, every single month. The interest is calculated off of the balance every single month, every single month, every single month, every single month. At any moment that you need to access some of that money, you can just write a check for it. You can simply write a check for it. Now, when you apply this concept, because of how you are applying it, you, my friend, are literally putting yourself in a position, depending upon what your income is, depending upon how much home that you actually own, how big is your house. You can literally be paying your house off in 3 years, 4 years, 5 years, between 3 to 7 years, you can pay your actual home off. Now, this is the biggest investment of your life. I'm not sure what else that you might have that has a $350,000 balance on it, a $250,000 balance on it. Like if you've got a credit card with a $250,000 balance and a home with a $250,000 balance, you, my friend, need to find the closest Narcotics Anonymous or Alcoholics Anonymous meeting, because there's something going on inside of your life that we need to talk about on another video. Okay.
Yeah, different session.
The reality is that since this is the biggest investment of your life, if you can pay that off in 4 years, 5 years, 6 years with the same money that you're already making, I'm not talking about adding more money to it, stretching yourself out, doing something abnormal. You can save yourself 300 grand in interest, 400 grand in interest, $500,000 in interest. Now, I'm not here to go through every single detail of this program simply because Michael posted a link. I'm sure you saw it, and I'm sure he's going to post it again for you to get more information. www.secureyourplan.com. Now, here's what I'm going to highly suggest when you go to that link. There's going to be 3 short videos. It is going to be a whole whopping 20 minutes of your life. That's it. Then you're going to download an ebook. When you download that ebook, I'm going to highly suggest that you read that ebook thoroughly. Within the middle of the ebook, there's going to be a HELOC calculator. And it is going to allow you to put your current mortgage amount, your current interest rate, the current amount of money that you make every single month, your current bills. It's going to allow you to put all this information in, and within a half of a millisecond, it is going to spit out and tell you you will pay your house off in 5 years, you will pay your house off in 6 years, you will pay your house off in 4 years, and you could save 400 grand in interest, 500 grand in interest, 600 grand in interest. Now, if it takes, I was talking to a gentleman earlier today, and I said, how long did it take you to sign your documents at the title company when you bought your home? He just closed about 60 days ago. He said, Cedrick, I was in there for maybe about 40, 45 minutes. I said, fantastic. All right, so you were at the title company for about 40 to 45 minutes when you signed all the documents when you were securing your brand new home, okay? Now, here's the reality of it. Here's the reality of it. Ladies and gentlemen, if it took you 45 minutes to sign all of those documents for 45 minutes, to get the keys and secure the biggest investment of your life, that there's a really good chance that you're going to be paying 2.5 times to 3 times for, it is worth 20 minutes of your life to look at 3 videos and another 20 minutes of your life to read an ebook and to plug into a HELOC calculator. Because every day that you don't do this, let's say that it says that you save $200,000 in interest. And you say, you know what? Okay, I'm gonna get back to that later. You save 200 grand in interest. Every day you say, I'm gonna get back to it later. Every day that you procrastinate, precipitate, and meditate, I want you to sit still. And if it says that your home is paid off in 48 months and you're gonna save $200,000 in interest, well, I want you to divide 200,000 into 48. And that's going to tell you how much that is on a monthly basis. Michael, I can't get on my calculator right now, so do me a favor. What is 200,000 divided by 48?
Already on it. It is $4,166.66.
Okay, $4,100. Michael, do me a favor. Divide 4,100 into 30 days.
$138.
Every single day that you procrastinate, precipitate, and meditate, or you say, I'm going to think about it, I want to marinate on it, I don't know if I should do it or not or whatever. Every day that you do that, before you go to bed, this is what I want you to do. I want you to look at your wife or look at your husband and kiss them and say, baby, I love you. I really do. And I want you to grab $138 and I want you to light it on fire. I want you to grab $138 and I want you to light it on fire. because that is exactly what you're doing. Now, if that's too strong of a visual for you, if you've got a sunroof in your car, I want you to drive down the highway and just throw $138 out of the window because you got it like that. Or I've got one better for you. Feel free to text Michael or myself for our address, and we will happily send you the address, and you can send us $138 every single day for the next 48 months, because that's exactly what you are doing. Now, I like to paint pictures, and there's going to be some people that are going to look at this and say, I didn't know you could do that. I didn't understand this. Let me call my mortgage broker, as if your mortgage broker is going to explain this to you.
Yeah.
But I need you also to understand this. When you first got into a six-speed vehicle, and someone was teaching you how to drive it, you did not know how to drive the car. You remember? I want to take y'all back a few years for those of you that know how to drive a six-speed car. You remember when your mother sat you in a six-speed car, your brother, your sister, your uncle, and you started the car up? And it wasn't like automatic, just put it in the drive and just go. No, you got to put it in neutral. You got to start the car. Okay, in order to move, you got to shift it into first. You got to put your foot on the clutch. Your left foot goes on the clutch, and you shift it into first. Now you got to ease off the clutch. You got to ease off the clutch in order to get the car to start moving. Now the car start moving. Now you're speeding up a little bit. You're up to 10 miles an hour, second gear. Speeding up a little bit more, you're up to 20, 30 miles an hour, third gear. Okay? When you started driving that car for the very first time, do you remember how many times you stalled the car? Car just cut off. You're like, oh, Lord, I'm at a light. Oh, my God, I got to cut it back
On a hill.
It just kept stalling and stalling. Some of you burnt the clutch out. You drove your mom insane. Stop, don't do that. You're putting it in second gear. Don't do that. The car isn't going to move in third. You got to start off in first. But now, if I fast forward 5 years later, 10 years later, 20 years later, even if you don't own a six-speed car and someone drops you into it now, you don't even have to look at the gears. You just get it and it go. First, second, you can listen to the RPMs. And time to shift, time to shift.
Yep.
And when it with some flash now, you got to lean to you. You got to lean to you. You got your Fat Joe playing, lean back. Lean back. You leaning now, you cruising now, baby. You Gucci. You cruising with it now. Before you were paranoid. You looking around, you all up on the steering wheel, hunched up like a 75-year-old mama. You all hunched up. Now you cruising because you comfortable. You know what you're doing. Remember, you didn't know that 15 years ago. So don't be afraid of what you don't know right now. You just don't know it. That's where the self-education kicks in at. Once that self-education kicks in, ladies and gentlemen, and you really understand how this works, it's game over. Just like a lot of people don't understand how infinite banking works. Once you understand how that works, game over. Game over. Most people don't understand certain things. And I can tell you right now, ladies and gentlemen, that once you understand this stuff, it will change your life. And the last time I checked, there's a little sentence that I'm going to pass the ball back to my partner on. And it's called, the truth will set you free. The truth will set you free. And once you understand the truth, ladies and gentlemen, your life changes forever, my friend. Back over to you, Michael.
Man, I really appreciate that, because that is information that people might not be ready to hear. Because a lot of people are out there and they're saying, I need a solution. They have problems. I need a solution. And then the solution is given to them. Well, everybody listening to our conversation right now, you guys just got a massive solution that might be right for you. Now, just like Cedrick said, I'm not a financial advisor. I'm not giving you financial advice. I'm not having a conversation with Cedrick to give you financial advice. But I do encourage you to go to secureyourplan.com, watch the videos, the short videos there, download the free ebook that you guys can get access to, and decide for yourself if this is right for you. There's very informative videos there. There's very informative ebook that you can download, and then work with the professionals to find the right solution for you from there moving forward. We're just here having a conversation, talking to you guys about what we know now that we know the truth. Ced's known the truth for a while. A lot of people that have had conversations with said have known the truth for a while now. Some of you out there watching this have known the truth for a while and you still haven't taken action on it. That's on you.
Mhm.
What are you going to do with this information? So definitely get yourself over to um, secureyourplan.com and take a look at that information, because it is something that I think each and every one of you at least need to explore the option of it. Now, Sid, I want to ask one more thing here while I got you sweating, because I love it. When you're passionate about something, when you are feeling it and it's coming from your soul, it's coming from your heart, that's when you put your whole heart and soul into it. And we see that coming out in you. But there's a lot of people watching this right now that say, well, I don't have a mortgage. I'm renting. I don't have this, but I got a lot of friends that need this, that would need to know this. And I want to be the rock star that just heard some amazing information that I want to share with them. Should they download this ebook still? Should they still go through this information to find out if there's something that they can do to help their friends out?
Absolutely, for two reasons. Number one, maybe you're renting right now, and maybe you're going to be a homeowner in a year or 2 years. Maybe you're looking to fix your credit to get to that point. You know, I have a significant amount of people in the real estate arena right now that are tearing this up with me. I got some of the biggest people in the credit arena. I'm not going to mention any company names here, but some of the biggest people in the credit arena, inside of the network marketing arena, as well as outside of the network marketing arena, that are taking advantage of this because they help their clients clean up their credit to be able to refinance, as well as to be able to buy a new home. So there's like a built-in audience right there. The other thing is this, you know, we're in a new economy right now. We're in a new economy right now, and there's a way to be able to make a significant amount of income with this particular opportunity. Now, I'm not going to get into all the 100% details, but I do want to tell you this. We know that this program is so good that it is a standalone program, meaning that we have a significant amount of customers. We do not have to have an affiliate program, because this is something that customers are buying. Ladies and gentlemen, you've got to think about this for a second. You really have to absorb what I'm getting ready to tell you right now. We are in the midst of a bidding war all over the United States over property right now. You know why? It's simply because the interest rates are so low and the inventory is so low. The inventory is so low. I talked to a friend of mine a couple of days ago. He told me that there's 1,800 houses for sale in the whole state of Utah. Then I talked to a different person that's in Utah. He said that number is wrong. It's only a couple of hundred houses for sale in the state of Utah. I talked to one of my millionaire friends yesterday, and he said he sold his house. He put his house on the market on Saturday. He had, I think he said 30 showings on Sunday. And on Monday, he had an offer on his house for $50,000 over asking price, full cash, and they're allowing him to stay there for another 2 months for free. That's what's going on in the markets, whether it's Georgia, whether it's Utah, whether it's Virginia, whether it's Maryland, whether it's California. It's all over the place. Now, some of you got a little paranoia and like, well, it's going to, well, are we going to see another 2008? Here's what you got to remember. What happened in 2008? What happened in 2008 is that they gave you a house just because you were breathing. What happened in 2008 is that you had a business card, you got a house. You came in with fake pay stubs. You had a house, okay? The whole Dodd-Frank situation changed that, okay? I mean, it's crazy. We're not in that same arena right now. That's not the arena that we're in. The arena that we're in is that most people don't understand how a problem can really make you a lot of money. If you ever wanted to make a lot of money in life, all you need to do is find a solution to someone's problem. That's how you make money. You find a solution to a problem. So what if I use Uber as an example, a lot of people don't realize that they can make money off of Uber. They don't realize that they could refer people to Uber with their link, and somebody else is driving the car and they actually get paid. And they paid nothing for that. There was no affiliate fee. There was no business package that they received in the mail or nothing. We've got a product that we know that's so good that when it's time for you, that you say, okay, well, I want to become an affiliate in it. Great. Keep your credit card in your pocket. You don't have to pay $500 to become an affiliate, $99 a month to become an affiliate. We have a mobile app technology that is the best mobile app technology that I've seen in 20 plus years of being in the direct selling arena, period, end of story. This mobile technology is so sexy that I can tell every single person for the past 45 plus minutes that I've been talking on this particular live, every single person that has clicked the link, because it's popping up on my screen. It tells me how long they looked at it. It tells me if they downloaded it. It's the biggest dry snitch tool you ever seen in your life. Nobody can ever tell you, well, I looked at the videos. Can you send me the money? Wrong answer. The app says you looked at the video for 17%. You, my friend, have another 83% to go. When you do that, then I'll send you over the money. You can't even go to the website and see anything about the money, okay? Because just like you don't go to Uber and see anything about the money. So we've got a phenomenal referral program, and instead of us paying a gazillion dollars on Google for clicks, instead of us running direct mail campaigns directly for the company, instead of us running TV ads or radio ads, it's people like you and I, through word of mouth, that are sharing this. And majority of the people that have gotten this product have gotten it from people who have just simply been excited about the fact that they saved 200 grand in interest. They're saving 300 grand in interest, 400 grand in interest. And okay, let me share that with a friend of mine. Michael, what do you happen to be showing everybody right now, my friend?
Well, my stream's coming a little fuzzy, but those are all the notifications just while we're on here of all the people that are downloading the ebook. It's telling me they're doing the calculator. They're calculating their mortgage, what they're going to save, how fast they're going to pay it off, how long they've watched the video, and giving me all the details I need to know of the 27 plus right now, just in the last few minutes, that have already taken action.
Fantastic. And those of you that are like, okay, I like this, and okay, how do I make money with it as well? Then you might want to, send Michael a private message, or ping him back some kind of way if you've got access to him. Well, you've got access to him. He's over the place. YouTube, Facebook, all over the place. You ping him, you inbox him and say, Michael, send me the money. But guess what? Before he sends you the money, he's going to look at his app. And if you haven't looked at 100% of all the videos, if you haven't downloaded the ebook, if you haven't accessed the HELOC calculator, there's probably going to be a really good chance that he's not going to send you the money, because it's showing him that you're someone who doesn't follow directions in the beginning. It's like, now for those of you that aren't even interested in that part, because again, this is a standalone product, you could care less about that. I just want to save 200 grand in interest, 300 grand in interest, 400 grand in interest. I need you to understand that this is a full-blown program. On the back end of this program, you have access to professionals that are going to walk you through the process, that are going to assist you within the process. This is not just a digital product that you're going to be trained on how to do the process. We're actually going to walk you through it as well with trained professionals in the mortgage industry, not someone that we hired that used to work at a bar that now all of a sudden is a magician on the internet. No, we're talking 15-year mortgage brokers that have helped thousands and thousands of people in the financial arena. Not someone who just started in the mortgage arena last month or last year. Professionals that understand exactly how this program works, that you're going to have 24/7 access to from a concierge perspective. And the rabbit hole just gets deeper and deeper and deeper. And I'm talking to a significant amount of clients every single day, Michael. So for people that download that ebook and have a question or two about anything that they're going through, then you can three-way them into me. I can talk to them. They can call into the switchboard. We've got a lot of different opportunities to be able to assist our clients, because, listen, we're not trying to be a billion-dollar company. There's all these companies that say we're going to be the next billion-dollar company. And that's cool. I mean, a lot of people say that. That's not what our goal is.
Mm-hmm.
Our goal is to help homeowners save billions and billions of dollars in interest. And I want you to understand how simple that is. If one customer can save $200,000 in interest, you heard Michael say his numbers were a little less than $300,000. If one customer can save $300,000 in interest, how many customers do you think it's going to take to help people save billions and billions of dollars in interest. See, this isn't a pie in the sky number here, ladies and gentlemen. Like so many direct selling company owners, we're going to be the next $1 billion giant. AK, and I'm going to be 6'2" and I'm going to play for the Lakers too. Wrong answer. We're going to show people how to really truly save billions of dollars in interest, and we're going to do it one homeowner at a time, and we're going to help right the wrongs that a lot of people are not aware of. So
Yeah.
that's the story, and I'm sticking to it.
Yeah, no, it's a good story. And I love that you brought that up because it is just it's a refreshing outlook. Most companies are only focused on revenue. I mean, that's what the banks think every single day. What have you done for me lately, Mr. Loan Officer? It's revenue today versus taking the approach of how much money can we save people that have a mortgage, 100,000, 200,000, 300,000. Let's find out how we can make that happen and get it done. And the other thing is in terms of, if you know Cedrick, if you know me, we are about programs that have an affiliate offer attached to them, have some way that, we get a little reward for sharing the value, our time, our energy, our educating out there in the customer space. But this one, quite honestly, you don't have to own the product. You don't have to buy the product. You don't have to have the service yourself. That's why I said, if you're renting right now, you don't have a mortgage, you can help other people out and get rewarded for it. But I'm still going to require you to watch the video, download the ebook, because we don't want thousands and thousands of people out there referring this product. We want honest people that are willing and wanting to help other people save that kind of money too, and not be focused on, oh, how much money am I going to make if I refer my friend? That's not the path we want to go down here with you guys. So if that's your angle, we don't want you as an affiliate working alongside of us. We want people that are in this because they genuinely want to educate other people, like Cedrick has graciously done here in investing his time tonight, sharing it with you guys here on Haps and on Facebook and giving you this information. I know a lot of you probably have a lot of questions, and I could ask you guys to comment a bunch of questions right now, and we'd be happy to sit here and answer them all. But quite honestly, the ebook does a much better job of systematically helping you understand. The videos do a much better job of systematically helping you understand if a HELOC is the right solution for you. So that's what I'm going to encourage everybody to do, is to go to the secureyourplan.com website, watch the little videos there, download the ebook, do the calculator to find out how much you can save, and then proceed on from there and make an educated decision if it is right for you.
Pretty simple. Pretty simple. And Michael, I will end with this. I will tell everybody, you sat at the title company for 30 minutes or 45 minutes and signed all of those documents. You can do the same thing to see if this is for you. This isn't for everybody. And we're not trying to enroll everybody. This is not for everybody. But there's going to be majority of you that are going to see this, and you're going to see the advantages that you have here. And for those of you that are sick and tired of being sick and tired and signing up in every program over here and investing thousands of dollars or $500 or whatever it is, this is another way that you can really, truly make some serious money, and you can become an affiliate for your favorite four-letter word. And because you can become an affiliate for your favorite four-letter word, that tends to attract a significant amount of people. But we want you to understand, because this technology that we're using with this, companies pay $97 a month, hands down, easily, just for the technology that we're utilizing to send this out, to track everything that we're doing. This is not something that started yesterday. The geniuses that are behind this, I've been knowing one of them for well over 15 years. The other genius, I would tell you that, man, this guy's such a great coder that if you remember the TV show MacGyver, he can actually make music come out of a light bulb. I mean, he is one of the best. He is the best coder that I've come across in this industry. And I've been a part of a lot of coders. And my second best coder is a magician. This guy's, I didn't think that I could find a better coder than him. And when they showed me this program, I'm like, oh my God, are you serious? You have got to be kidding me. So ladies and gentlemen, this is zero hype. For those of y'all that think it's hype, then just ignore it. Just ignore it and don't do anything. It's totally up to you. For those of you that are curious, check it out. But I will tell you this, when Michael and myself lock arms, and these leaders that have locked arms with us, the numbers have already been astronomical. We do astronomical numbers when people have to pay money to enroll.
Mm-hmm.
It's not fair when it's your favorite four-letter word. I'm like, man, I haven't been able to sleep good. I had over 900 inbox messages in 48 hours, man. I'm like, I'm going to have carpal tunnel trying to get back to all these people. It is crazy. So, and look, people lie, but numbers don't. That telephone isn't lying. And Michael, just so you are aware, you need to tell your beautiful wife you're going to be a little tied up tonight, because that is going to happen all night long. For people who see this on YouTube, that see it on Facebook, that see it on HAPS, it's just going to keep ding, ding, ding all night long. So I look forward to working with each and every one of you that look to lock arms with us. I look forward to helping anyone that's here that really truly wants to save hundreds of thousands of dollars of interest off of their home and really secure that number one asset of your life. Michael, I'm humbled to always be sharing the stage with you, my friend. Thank you for having me here tonight. Thank you for being able to share with your audience. It's always a pleasure to do so with you, my friend. So I'm going to fade to black, and I'm going to pass the ball over to you, because I've got some dinner waiting on me, and it is time for me to say adios.
I appreciate you said very, very much. Thank you very much, time. And I will connect with you here very soon. Thank you very much. We'll see you soon.
Absolutely. Thanks, brother.
All right, guys, that was it. That was my conversation with the one and only Cedrick Harris, dropping some nuggets. I know he dropped some information there that might be very, very life altering to some of you guys, and you'll only be able to find out if you go to secureyourplan.com. Go to secureyourplan.com. Put your money to work for you, and especially the money that you have most likely in your house. That is one of the best things you can do with your home equity, is to secure this kind of a plan. But you'll only know if it's right for you if you go to secureyourplan.com. So one last thing here before I let you guys go. In terms of conversations of the successful, it's interesting when you start talking with other people that are successful. Everybody finds success in their own way. They make it their own. And that's been a big common denominator in so many people that I've had conversations with that are successful in their own right, in their own way, on many, many different levels. So I want to venture to say that each and every single one of you guys that are watching this right now have achieved success on some level. Even if you feel like you failed on some levels, you've still had successes on some levels. And I would venture to say that I could interview just about every single one of you and find out something that you succeeded in your life that you're proud of, that people could learn from, and they could get valuable information from. So I want you guys to think about that for a second. What kind of conversations are you having with your friends, with your coworkers? Are they conversations that are triggering success, or are they conversations that are just keeping you potentially stuck at where you're at? I love to help people level up. I love to help people succeed higher and higher in their life. And that's what I'm here doing, especially here on HAPS. If you guys have not done so already, if you're watching this over on Facebook or YouTube or Twitter, I encourage you to go to haps.club right now and get yourself set up with a completely free social account on haps.club. You're able to stream on one platform and go stream live on multiple platforms, on multiple social accounts, not to mention an amazing community of people over here on haps.club that are doing some great things and helping people, and just an amazing community. So whether you just want to connect with more people, if you have a business that you want to market, whatever it is, definitely get over to haps.club and get your free account set up right now. All right, guys.